there's a gap in the market for a different format of money that doesn't exist yet, which is obviously the CBDC, where CBDC comes in. That isn't a commercial bank liability, isn't something that I have to use my credit card or my bank account or my debit card or my making a transfer from my account to your account. Because at the end of the day, we have to interact with these other intermediaries in order to transfer our money.
Welcome to another episode of the Untangling Web3 podcast. Today, we're delighted to have John Velissarios, a distinguished authority in the digital financial realm. John has a 25-year tenure in IT and financial services. He also served as a managing director at Accenture for digital assets, custody, and central bank digital currencies. John has advised multiple governments, spoke at some of the largest events in the world, and has an extensive portfolio of publications and patents. Welcome to the podcast, John.
Thank you. Great to be here. Thank you very much.
Yeah, thanks for joining us, John. We're really excited to have you on. We wanted to tackle this topic of CBDC and central bank digital currencies for a long time now. And it was one we were tentative about because we wanted to have an expert with us to kind of guide us, hold our hand through it, because there's a lot to talk about. How are you today, John, first and foremost, though?
Very good. Thank you. Very good.
Awesome. So let's kick things off. I know you've got a very storied career in history, as Alec indicated there, but can you just give us a very brief background about your early career?
Well, early on, I guess, before I got into the whole CBDC topic, I actually worked in software development many years ago. So even before the 25-year sort of career in technology and financial services, I actually worked in software development in the aerospace industry, where I was involved in a lot of mission critical systems and working in in aerospace, and then decided to make a jump into sort of a career in consulting, where I started working for a big consulting firm in London, and moved over from Canada originally, and started working in the whole information security space. And I have a background in cryptography and technology, of course, and software development. And I got involved in this whole space of financial services through my cryptography and information security background.
Awesome. Yeah, I detected a slight Canadian twinge there, so I'm glad I was right. And it sounds like you've got the kind of career that would suit you very well, obviously, to working in CBDC world. But was there anything in particular that led you into this space, into digital assets, CBDC, and now I guess what we're calling Web3 in a broader sense? What was the pathway from
Sure.
what you were doing early on in your career to now?
Yeah, I mean, I got involved in the whole cryptography, not necessarily crypto as a currency, but cryptography space and information security, and that sort of brought me into the whole financial services payment space. I spent quite a lot of time working with big banks, financial market infrastructure players, and a variety of different sort of organizations that are heavily involved in financial services, and doing a lot of information security work in that space. So anything from crypto key management and all the way through to risk management around those systems. And that's how I sort of got into it. And then I took a career break halfway through that time, and I ended up joining a Bitcoin wallet company. That was about over a decade ago, and that sort of I took a year off from my consulting life, where I was doing information security stuff beforehand, and took a role in this Bitcoin wallet company, and spent a year and a bit sort of working with that organization to try to commercialize more of the offerings that they had and things like that. I went back to Accenture actually at that point, and I quickly realized, and I also had one of our very first blockchain projects, which was with a central bank, and I ended up sort of spending another year delivering that project with a team. And that meant I was sort of I had almost a break in my sort of information security career by sort of taking that year off, working in this crypto wallet company. Another year working on a central bank project in the whole digital currency space, and that was sort of a very natural sort of pivot point for me, because at that point I then never looked back. I actually said, this is what I want to do. I want to look at how we develop digital currency, digital assets, even crypto custody as well, and this whole topic. And it was actually a very natural place for me because of my information security background and knowing how critical a lot of that stuff was. Understanding cryptography, understanding the mathematics behind it, and also the sort of the practical security implications of handling a lot of these type of new innovative technologies and stuff like that. And given also the financial services background, it was just a natural fit for me. And I ended up spending the remainder of my time working in consulting in that space. And then obviously at the beginning of this year, I'd left and started up my own thing as well. So.
It seems like a fairly natural character arc, right? You had the technical background working in cryptography, then you moved to financial services, but then you also developed the consulting skills, the ability to actually communicate all the advantages of these technologies to ministers, central banks, these people that are making the decisions. So I'm going to put you on the spot here. Rather than calling them central bank digital currencies, we just save a lot of time by just calling them CBDCs. What is a CBDC?
Yeah. A CBDC is basically a digital currency, a third format of central bank money. I mean, for those that, obviously for those that, just to be very clear, central banks sort of have two formats of money, right? There's banknotes in circulation, things that you and I probably use much less these days, but in some places it's still very, very, actively used. And digital money held by central banks in a digital register. So those are two forms, but the latter is basically more tailored towards commercial banks who hold their reserves with the central bank. And so it's digital in nature, of course, but it's not meant for consumers and the general public to use. So CBDCs actually converge, for lack of a better description, is a convergence of both of those. It's a digital format of a central bank liability, like a banknote, but meant for wider use. So there's retail users for it. So you and I can use it to buy things with CBDC. There's wholesale uses of it, which is more for commercial banks and other types of large-scale payments, even commercial entities and so on. And I want to also maybe make an adjustment here, because a lot of us sort of the common terminology the last few years has been retail and wholesale, but in reality, if you take a look at that, it's really more of a general purpose digital currency, because it doesn't even if you put it into a circulation for consumers to use, there's nothing stopping a commercial entity from using that as well. There may be different limits, there may be different interfaces and things like that you may have with regards to the usage of it, but a general purpose CBDC is something that could be used across the board for both retail, wholesale, commercial applications, and so on. And I think it's important to sort of make this distinction now, because we sort of are guilty of having created maybe a too simplistic language around retail and wholesale, but that's maybe a topic for another discussion.
That's really interesting, because I've read up on these things and I'd never considered that before. I always thought in the mindset of you have retail CBDC, which is for general public, digital cash, like you said, used for daily transactions, then wholesale, which is for big financial institutes, large interbank stuff, not for the general public. But you're so right. Like, what is stopping someone using a retail CBDC if they're a commercial entity? That is really interesting. First, big learning curve for me. So that's a little bit on the what and the distinction there. Okay, why do we need CBDC? This is a really interesting one with the hype around crypto and all this kind of stuff. Why do we need a CBDC?
I think, and this is also a sort of a timing thing. I think if you take a look at the innovation that's happened over the last couple of years, blockchain technology, if you take a look at Web3, if you take a look at sort of the digitization of money, online services and things like that, there's a gap in the market for a different format of money that doesn't exist yet, which is obviously the CBDC, where CBDC comes in, that isn't a commercial bank liability, isn't something that I have to use my credit card or my bank account or my debit card or my making a transfer from my account to your account. because at the end of the day, so we have to interact with these other intermediaries in order to transfer our money. And here a CBDC is something that I own. It's basically my own. It's like a banknote, right? And I have the ability to transfer it to you in a digital manner, and it's final, and it's something that then you can also give me sort of change if you or goods or other types of things back as well, digital goods and things like that. And I think this is where we have a new sort of paradigm of engaging with each other that wasn't possible before, especially when you're dealing with payments over long distances, payments across borders, payments where people don't have a bank account, perhaps. And I think this is also a very important dimension that is also looked at. If you take a look at there are large segments of the population that are unbanked, and depending on countries, of course, and so on. And there's certain functionality that you can enable with the CBDC that allows people to transact with each other without even needing a bank account in order to do that, or credit cards or anything like that. You can just basically do it like you're sending an email. I can send you money like you're sending emails. And it's something that is final. You receive it, you do something with it, you spend it, you bank it, you do whatever you want to do with it. And I think it creates a new ability for us to transact with one another that wasn't possible before. And the timing of it will be as a result of sort of the technology innovation, which I think has matured enough to the point now where you've seen a lot of CBDC projects sort of tip into from pilot to production and so on, and we'll see more of those. But it's addressing a need in the market, and that is unfilled. And I think there are a number of very specific applications of CBDCs that I think are very interesting. You could argue the retail case, whether the retail consumers need that or not, and there's a lot of discussions and debates about that, and that is very jurisdiction specific. In highly banked, highly technologically advanced, or Western countries where everyone has a gajillion sort of bank accounts, credit cards and payment methods, Apple Pay, Google Pay, and all these things, it may not serve that much of a useful purpose for those individuals. Whereas in other markets where they don't have a bank account at all, for instance, and the government wants to distribute social aid, social benefits to them in a very frictionless manner that doesn't require intermediaries to distribute money. And of course, with intermediaries comes cost, comes friction, comes other sort of challenges as well. And I think that's this is definitely a more inclusive way of distributing social aid to sort of consumers that can use it for paying for goods and services. And we've seen that in several projects. I can talk more about that as well. But there are other applications of CBDC that I think are probably even more powerful. And I think this is where the innovation will take us, I think, very quickly, because it's a space where there's a tremendous amount of friction and cost. And that's in sort of the cross-border side of things, whether it's consumers, sending money home, remittance payments, or whether it's medium-sized payments or even large value payments. There is a high degree of friction because of the number of intermediaries involved today. And if you may know, of course, that when you send money abroad, you're not actually sending the money, you're sending a message. And some other bank at the other end is basically debiting and crediting accounts, and there's a whole bunch of sort of transactions that take place to sort of complete that transaction. But here, if I send a CBDC from one person to another in another country, they receive it instantly, and it's theirs, and they have it, and they can spend it. And I think it's a different type of it changes the geography of money, right? At the end of the day, the way money is used across these different geographic boundaries. So I think there are retail cases where consumers are using it to transact in very, in very different ways than they're doing today with other forms of digital payments or banknotes, or access to government money and things like that. And there are also sort of, in those scenarios, there are also some extreme cases where you have distressed scenarios, like at times of economic distress or times of national emergencies and so on. What do you do? How do you get money to people? How can they pay for things? How do they, how do they transact when they can't can't use their bank account, for instance, or or their credit card or whatever. Yeah, so those are some of the things to consider as well, from a retail point of view. From a commercial payment point of view as well, there's a high cost associated with payments, and there's a lot of friction associated with that. And also, I think on the cross-border side, where there's a tremendous amount of value in using sort of CBDC for dealing with cross-border payments in a more efficient way.
I thought it would be a simple answer. Why do we need CBDC? When you say, like, why do people need crypto? They usually use the same buzzwords: immutability, I don't know, double spends, efficiency, all this kind of stuff. But what you're saying there is it's very complicated, and it's very specific to the region, right? Like you're saying in the UK,
Absolutely.
maybe inclusivity isn't the biggest problem. We have like good financial setup, good financial rails, all this kind of stuff. But say in less developed countries, inclusivity might be the primary driver behind it. And in the UK, maybe it's more about supporting some kind of public utility in the digital age, like having public services and public money in the metaverse, for example. So it's quite a complicated question, right?
Yeah. It is a complicated, and it's one that's not only been studied a lot, it's one that's been debated a lot, and it is very jurisdiction specific. And I can give you a couple of examples in very advanced economies. One of the things that they were looking for is and where there's a high degree of digital payments already. So there's a very, very little usage of cash, high degree of digital payments. Everyone has a plethora of methods of payment. But what they were planning for, what the central bank and the government was looking for, was what happens when I can't pay for anything, like the internet goes down and the electricity goes down. What happens then? How what does society do? How long can you last? Is it a day? Is it a week? Is it a month? What happens then, right? So, and that's a very scary scenario. It doesn't matter which country you're in; it's a very scary scenario. And I think this is also an example. I'll give an example of where that happened, where a grocery chain in one of the Nordic countries went down, and their payment system went down rather, and they had a tremendous amount of difficulty because they were in many different villages and towns and cities across the country, but they couldn't take any payment, and nobody had any cash. So they had a store full of goods. They had people that wanted to buy the goods, but no way to pay for the goods, right? There's no digital means of payment. So what does one do, like, actually? And that's just a practical, like, daily or day-to-day thing today. But what happens if it was in a more distressed scenario than time of war or conflict or something like that, a natural disaster? Then it becomes more difficult. And a CBDC would be a much more effective mechanism for distributing funds, emergency funds, to people, and then they would be able to use them over to make payments and things like that as well.
Yeah, that's fascinating, because I think one of the examples that springs to mind would be the stimulus checks in America during COVID-19. And that obviously there was lots of fraud around that, and people claiming for them, especially in the UK as well. So I think there are these, as you say, these use cases, even in the more developed economies, where it's not just purely about payments and remittances that can motivate this. There's actually so many little threads I want to pull on from what you said already. But one thing that really caught my eye is that you said about the technology maturity being there. And when I think of CBDC, this is Untangling Web3, we tend to think of blockchain, right, as the technology infrastructure for CBDCs. But so my question is that what you're referring to when you say the technology's matured? Does CBDC require blockchain to work? I'm intrigued by that question.
It doesn't necessarily require it to work, and I think it's an important point to make, because we've sort of veered into this because we've said that blockchain technology is the most effective tool to use in order to solve this set of problems. But I think there's a bit of maybe a misunderstanding there, because there are a lot of ways that you can still implement CBDCs even without blockchain technology itself. There are mechanisms by which you can do this, and a couple of cases, a couple of examples that we've had. A CBDC implementation many years ago that didn't have blockchain technology with it. It had strong cryptography. It had secure methods of communicating value from one sort of card to another, or one person to another, and stuff like that. It didn't use blockchain technology in order to do that. It is, however, blockchain is sort of a very effective mechanism because of of the solving for double spend problems and the things that you described before. At the end of the day, there are effective mechanisms by that many of the implementations of CBDCs have been implemented in blockchain technology, but it doesn't necessarily need to be. Just to be very clear about that, it is a function of what kind of capabilities you're looking for specifically in the implementation. And again, every single one of these projects or implementations or jurisdictions is very different. They're all trying to solve for a slightly different set of problems. And so for some of them, it may not require blockchain at all. For other ones, it might require it because it's the most effective mechanism, effective means of implementing what they're looking for.
Yeah, I mean, that it kind of links back to the why, right? And the why is very dependent on the region, and that will obviously affect the implementation. And a thing that I kind of picked up there was on the blockchain side is I imagine central banks, they want sovereignty. How does the whole sovereignty piece, which is one of the considerations, fit in with, say, the public blockchain agenda? Like, I can't imagine, say, some sovereign states wanting to have a CBDC that's based on a public blockchain with, network administrators, which are effectively miners based in other countries.
It's that is also very a widely debated topic as well. I think it's a very good one because I think the sovereignty play is a very important play. Clearly, because you're talking about a country, you're talking about its money at the end of the day, and that has a tremendous amount of impact on financial, fiscal, monetary policy, and everything else. And so, the ability to be in control of that, I think, is absolutely key for any sovereign country that's and the money that they issue to their society. And I think that if you look at the various, projects and things like that, it's very difficult to see how a public version of any ledger that could be used specifically for enabling a sovereign entity to be able to issue its money on top of that sort of public ledger. Having said all that, this is still, there's still room to explore, I think, and I think there is potentially an overlap with regards to what role do public ledgers and assets and currencies and everything else that gets built around all these things interface with and interact with a sovereign CBDC that's implemented. So I wouldn't sort of I wouldn't want to be the one saying this because at the end, it's hard to predict the future, but we may at some point see something like that on the public ledger, something implemented like that on the public ledger, because there's a lot of benefit for having it rolled out in such a way. But I think at present, it's just too much of a leap for many central banks to be jumping into and saying we want to implement our CBDC on a public ledger. It's the same sort of debate you would have with regards to cloud computing and servers in a server room at the end of the day, right? So many organizations that are running critical national infrastructure will say we want all of the stuff in full control of it and so on. But over time, as you saw, as we see sort of many of these different cloud providers and the resilience of their networks and stuff like that, people have relaxed a lot more on that front, and it's not impossible to see some sort of point in the future where CBDCs may be implemented on public ledgers. But for the moment, it's a sovereign play. It's a very strong story, and it's still very early days. So I think they'll be very nervous to implement these on public ledgers.
It makes sense, right? That there's a big risk aversion there. But one thing that I picked up on, which is really interesting and not thought about before, is the idea of how CBDCs work in the whole world of digital assets that is obviously now going to be hitting the mainstream over the next 5 to 10 years. And that really brings in to the idea of interoperability, not just between different currencies, but also between other assets. And I mean, public blockchains probably do have an advantage there if everyone can kind of link and trust the data without it having to be in a permissioned way. So I assume that might be a sell down the road once they've kind of built on maybe a Web 2.5 kind of version potentially, or whatever we call it.
Digital assets, I mean, I think are at least from the wholesale and commercial, security settlement perspective, this is also an area where CBDCs can play a very strong role, because of the fact that if you're going to have digital assets on an exchange, well, how are you going to settle those assets at the end of the day? You're going to use some form of traditional payment rail. Well, that's okay, but you're going to basically rely on settlement in a different medium. And I think the reason why that's not appropriate is because of the nature of the type of transaction. So I'm giving you an asset, and in exchange, I want an immediate settlement for that asset in the form of digital money, and I can combine that in a transaction which is atomic. It'll either complete or fail. I can automate that. I can put smart contracts around that. I can do various things with it that make these transactions much more effective when you're using digital assets and digital CBDCs, basically, in order to do the settlement side of it. Not to say that you need to do immediate settlement, because that's also another open point of debate. It's just that when you do the settlement, you actually want the money aspect of it to be sort of in the same format, so that you can complete that transaction in a more effective way. And I think this is where CBDCs come into the digital asset space to build digital exchanges or digital financial markets in a much more effective than if you had just one of those dimensions addressed. It's great to have digital assets, but how do you settle them? And using CBDCs is a very effective way to do that.
I think I'm trying to crystallize in my mind, because there's a few different pieces that are coming together now, but I'm still wondering on this interoperability piece that you mentioned. And I'm sure one question our listeners will have is around, okay, we said one of the big benefits of this is kind of cross-border payments, maybe for remittances or something. My question is, do you need a CBDC to be set up in both the origin country and the receiving country? So say I'm from the UK, but I want to go and live and work in Europe despite Brexit. But let's ignore that for a second. Say I go and live and work in Europe and I want to send funds back home. Do I need, in the CBDC model, to have the UK and the EU both using a CBDC that talk to each other, or is there a way this can work kind of unilaterally in your mind?
Less effectively, yes, you can, but you're also then dealing with something that is instantaneous. It's sort of, let me sort of put it in a slightly different way. If I hand you a banknote and you hand me an IOU, right? That's not equal, right? At the end of the day. So if I'm doing these kind of transfers, I want something of equal of equal value, not only in terms of the unit of account, in terms of the value, in terms of the what you're giving me, but also in the fact that it's immediate, it's final, it's there's no way to dispute it and things like that. So I think we see a tremendous amount of interest on the whole cross-border side, and the reason for it is traditionally we've been using a network of correspondent banks. We've been using mechanisms like SWIFT to do the messaging back and forth to say I want to transfer funds from here to there, and correspondent banks to sort of route the money around and so on. And not only that, but it's also been done in a very limited number of currencies or currency pairs. So when you get exotic currencies, right, into the mix, they usually triangulate through dollars or whatever. And the challenge is you then get a lot of friction associated with that transaction, and timing and delays, and sometimes things get blocked and all these other things that happen as a result of that. And where we see a lot of interest is the fact that if I have a CBDC in my country and you have a CBDC in your country, and we agree to transfer to one another this in order to make this currency exchange, there's nobody else that's needed in the mix in the middle of that, right? So we just basically agree a price, and there may be some market data that we can use in order to do that. We agree a price and exchange rate, and there is an immediate transfer value. And this is where I send you the money only when you send me the money. And because it's a CBDC, and its atomic swap can happen in a very effective manner without risk associated with the counterparties in the middle of that. So when we talk about, why do this in the first place? Well, we're trying to eliminate is really, it's not necessarily the speed, because things can be, quick these days. Faster payments is pretty instantaneous. Maybe it's not the speed dimension of it. It is the fact that you have counterparties in the middle of it, and depending on the leg that you're transacting, or the currency, or the, and I think that's where it becomes much more of a challenge, and where CBDCs, especially when you have multiple countries looking and implementing and creating an exchange around those, then it becomes a much more effective way of transfer value. There are several projects that have happened. And I think I just want to make a couple of points. The first one is central bank money has traditionally never left the jurisdiction of the country in which it issued it. Apart from banknotes, right? So banknotes can move freely, and sometimes there are capital controls, but fundamentally they can move. But digital central bank money has never been able to leave the jurisdiction in which it's been issued. And now with CBDCs, you have the ability to do that. There are a couple of projects. The first one of its kind is something I was involved in, was called Project Jura, where you had the Banque de France issue a digital euro, and it was used in a security settlement in Switzerland, and vice versa, that transaction. And that was a liability of the central bank. So it was, the counterparty risk is zero, and you can use it in order to do the settlement of a securities trade in another jurisdiction. Now, fast forward that a little bit. Projects like Enbridge also did the same thing, and they used 4 different currencies from 4 different central banks, and they allowed sort of 20 commercial banks to move money across these 4 jurisdictions without ever touching the dollar, right? It was Central Bank of UAE, it was People's Bank of China, it was Bank of Thailand, and Hong Kong Monetary Authority. So all these and all these sort of transactions were happening as a payment versus payment in their local currencies, but they never left. They basically never touched any other currency in the exchange that was taking place, and the money moved from jurisdiction to jurisdiction. Now, if you fast forward that even further, imagine a scenario where you have free flowing sort of central bank digital currencies across multiple geographies in a more efficient way, and you're creating a very different type of ecosystem basically on the back of that.
That is, that's really interesting. And now I'm glad we're kind of getting into some project specifics. I know Jack wants to talk about the digital pound at some point, or the proposal for the digital pound. Something that has kind of come to mind for me there, I was reading an article about the digital yuan. And when you were talking about cross-border settlements, and then we were also talking about sovereignty earlier, it was the digital yuan being used in Africa. And obviously it's a really efficient mechanism for a lot of people in Africa right now to actually use this central bank digital currencies based in China. But it creates a sovereignty dynamic, right, for African governments that now no longer have, financial control over assets in their regions. What does that mean?
You have this in many countries around the world. You have dollarization, where the dollar is the predominant currency, regardless of what has been issued by the local central bank. You have euroization, same sort of concept as well, where the euro is used predominantly for transactions rather than local currencies and so on. And now, I guess through the digital yuan, that you will end up with yuanization or renminbiization of the marketplace. And I think that'll end. These will all play out, right? I think at the end, and I guess it's the function of the utility, how you can use that money in a local market. And I think the interesting thing is it's not a far-fetched sort of idea where, you have China has sort of invested a tremendous amount in building this Belt and Road Initiative across the world, right, from China all the way through to Central Asia, through to Middle East and Africa and Europe and other countries as well. So there are a lot of jurisdictions that are part of this Belt and Road Initiative and infrastructure so ports and roads and everything else. That allows the flow of goods to go back and forth between these different countries. Well, if you have also major buyers like China who are buying these raw materials from all these different countries, how would they pay for it, right? Do they pay for it in dollars? Do they pay for it in local currency? Do they pay for it in yuan? And at the end, it's not that far fetched to think, well, if I can give you a digital currency immediately, and you can also spend it immediately, so you can put it onto your wallet, you can link it with your Alipay wallet and so on. You as a consumer sitting in Africa can make payments based on things that you received, and it may be more stable than your local currency. So of course you can accept it. Of course you're going to want to use it. That's where governments begin to lose sort of the sovereignty, I think, and the ability to have more control over their monetary and fiscal policies. And I think that's where it'll all play out. And I think at the end it means that those countries will have to do more to provide a level of prudence in their economic affairs. Otherwise, you'll end up with these kind of dollarization, euroization or oneization of economies, which we've seen in many cases. There's no easy answer to that.
So speaking of, no, as with a lot of these, I think you're doing a great job of managing very not easy answers. So thank you for giving us all the detail. So kind of, as you mentioned, sovereignty, let's bring it back to the UK. As Alec said, I'm very interested in, obviously, the Bank of England is currently in the process, as most central banks are in the world, of exploring what CBDC looks like. So I'm not actually completely up to date with what's happening there. I'm sure you are. Maybe can tell us a little bit about it, because I know lots of people are talking about it kind of in general in the public. There are definitely people who are talking about it from a concern over privacy potentially, and worried about what the Bank of England might be able to monitor via what they build. So maybe if you're up to date with this much more than we are, can you give us an overview of where the Bank of England is and kind of what roadmap there might be in the UK for a CBDC?
Sure. I mean, I think I want to touch upon the privacy topic because I think it's a big topic on its own. Again, not an easy one, but I think with one of the challenges I think that we all have in discussing these topics is that people are concerned about, and sometimes we're very rightfully concerned about, things that may happen, right? At the end, it doesn't mean that it will happen. It just means that it may happen when you end up with solutions that are rolled out that have that have things that of concern for consumers. Privacy is a very big topic, and in many markets it varies widely in terms of the degree of concern from the general public. In some markets it's not a concern at all. In other markets it's absolutely the most important thing. And I think it has a lot to do with trust and faith in government. It all has a lot to do with perhaps the geopolitical, the sort of context in which countries are operating in, degree of surveillance of government, things like that. So I think it has a lot. There's a lot to consider, to unpack there, to look at privacy as a topic. But again, the thing is that a lot of that can be completely controlled and implemented with solutions that provide a very high degree of privacy for consumers as well. So there are projects worked on them and are working on them as we speak, where users can have a high degree of anonymity with regards to purchases that they make. So just like buying things like with cash, either you can control how much information you share with a merchant, you can control how much you sort of provide to them as a result of the transaction, and only in extreme circumstances if values are above a certain amount and a number of conditions are met, then obviously things are disclosed to regulators if need be, right? So situations like that. But I think that's also a very important thing to sort of highlight for people to express that concern and to make it a very important topic. And then obviously it gets factored into the design and the building of the solution. So not all CBDC solutions are the same as you implement them. So you can have high degree of privacy and anonymity. It's more complicated, but it's doable. Or a very much transparent solution where every transaction can be monitored and so on, if the central bank and or regulator would deemed it necessary, or deemed it desirable rather. However, consumers always have the option to not use it at all. I think so. There's a balance between, you're providing something that people don't want to use, and then all of a sudden people don't use it. So then it's an immediate feedback loop where people just stay away from certain things. So I think it's I think it's a lot of things to consider. The thing I think it's important is not all solutions are the same. There are a number of them that have different types of privacy sort of baked into the solutions as you roll them out, and important points that they need to be sort of factored into the design, and of course important that consumers express that concern to sort of their into the central bank that's actually implemented. There's a lot of consultation papers that are out. There's a lot of consultations that have been taking place with regards to sort of the wider market, including the Bank of England that has done a number of those things as well.
This was the first part of a two-parter on central bank digital currencies with John Velissarios. Thanks for tuning in to another episode of Untangling Web3, produced by Emma Camilleri.
Don't forget to send us your thoughts, questions, and comments on social media, and be sure to follow us on your favourite podcast provider to catch the next episode. See you next time to untangle a little bit more of Web3.
The views we express here are our own and do not reflect the views of our employers.